Hey, what is going on, everyone? We are Friday market breakdown, and markets are looking pretty good today. So, obviously, we have to bear in mind with the US related pairs, we do have the non farming payrolls, employment rates of the USA, which will cause some volatility. So, what I am analyzing now can change quite significantly due to the volatility that comes in the market during New York session. But let's jump straight into it. So, looking at the DXY, the one thing I do like about this is we have been moving up aggressively to this point here. However, we have made a sharp turnaround. In many ways, we were originally looking at this area here, and now we're trading below it. This, I think you can probably say that this is the 50% off the move, regardless. And yeah, essentially, moving below this and now selling off, I guess this kind of just does change things ever so much. It kind of put things in the perspective that we can sell off and come to this low and eventually potentially break through it. Given the circumstance of how the US related pairs are looking, it's very much possible, even with the Euro USD going long. So that's something I will bear in mind, but we have to always look at, what is really and truly the structures that we trade, and something like this can also be a very good trade. So we have to be mindful that there's a few variations of what could potentially happen. We have to understand that we're just going to have to trade what we see, but for now it is looking like we are looking a little bit bullish. Going into the 4 hour, we can see that we've broken below this area here, and now we're just kind of just dropping off. So we're seeing a lot of selling momentum in the US related pairs. However, in no way I would say that let's just jump into a trade right now. There's definitely some good trades, and I'll highlight them as we go through this, but definitely be sharp because it's looking pretty good. Moving on to the JP225, which is even more interesting, we can see that we're actually filling this reversal structure over here. We've broken above the mass psychology area, and now in terms of this, we're now trading in a very valuable area. This sort of price around here is going to just determine what's going to happen. We don't have to fill this completely. It's probably more interesting if we do, but we have to understand that right now we have more than enough for this to sell off. If we get a clear retrace in this section, I guess looking at that, it's still very good. So one of the most interesting things is if we get a push back into here, we could probably aggressively count our bucks that the JP related pairs will sell off as well. Looking on the hourly, we still have some aggressive bullish momentum. We may even have more bullish momentum than we expect and push up even further before we come in. But that's something that we have to price in when we are taking trades. The next thing that I am looking at is the USD yen. USD yen is actually also pretty good because we can see that we had this sort of expanding structure below all of this price, and then we priced in. This is actually a pretty good trade. I think, in terms of where we are structurally, we've pushed above, we've pushed back in, we've significantly come back down now. It is a level of corrective, so we have to take that into consideration that we are moving correctively down, and there is a strong possibility that we can bounce back up. However, given the structure within here, it's easy to see on the 15. We can see that we had this small inflection area here. We had a 1, 2, 3 leading into it, very corrective price action, and then a nice little sell-off. 15-minute retrace there, which I think is more than enough. Even the trade over here. So the trade is pretty good in just kind of sizing it up and looking at it. You'd have more than enough room to manage it to the low anyway. So it's a good trade, but like I said, with NFP just around the corner, you may want to hold fire, or it may work in your favor. It's just one of those ones where it's expected to be negative this time around. So if we do get the negative outlook for this, we can assume that the US related pairs are going to drop off quite aggressively, and it could be pricing yourself very smart in there. So that's basically it for USD yen. I think USD yen is looking really nice. Euro CAD, EuroCAD is also still selling off at this point. We haven't really seen any sort of full momentum. We did see the bear flag forming at the bottom here, which, we had this sort of section here, and then there was an entry in there to go short. Looking at that now, if we size that up, yeah, you're looking, could be running around about 3-odd%. So there was a decent position in there. I was personally waiting for price to gravitate back up here, but sometimes, we can just sell off without it. So, it's one of them ones. If you're comfortable taking it, take it. If you don't want to, you don't have to. Aussie US dollar. Aussie US dollar is also looking pretty good. We've had some nice continuation patterns on the lower time frames, as we can see in these sections here and here. I think Aussie related pairs are looking very nice for the long position at the moment. I think one of the nice things I'm seeing about this is that we had this sort of drop off, expanding, price just aggressively started pushing back up. Does not want to be down in these areas. So we may actually see price aggressively pushing its way up and getting all the way back up here, or potentially creating another very corrective structure. So we have to kind of read between this and realize when we need to evolve. And the question is, are we creating something like this? There's a few variations of what could potentially be. And I think right now we just have to keep it very simple and just look at what we have. And we can see we're in a clear bull momentum, 15-minute. Definitely there's room there for refinement. And we can see that, in here, not your cleanest sort of structures, to be honest. But yeah, price is just basically moving up in this sort of momentum. Eventually it will exhaust and we might get a larger pullback and some larger structure to take advantage of it. But at the moment, it's just looking like we are continuing to the upside. Moving on to GBP yen, across the board, we are seeing potential shorting positions on the on the yen related pairs. So this would be no surprise if we do sell off in this area right now, where we kind of just see this in itself, and then, price is just in here and it just drops off. I would not be surprised at all if we near missed as well to this section here, this structure here, and we didn't quite get there and we just sold off already. It's very possible. But, like I said, there could be some momentum coming into the market and we see something else happen. But at the moment, I wouldn't really want to jump into this at all. I would want to wait for the market to really reveal its hands, because this could just be more corrective price. And if you do jump into this, you just risk staying in this sort of price until price does get up here. And then you'll ask yourself, why didn't I wait for price to reach these areas before I looked for the short? So that's the kind of context behind that trade. But more than enough, you could get one big candle and price pushes all the way up and then comes down. So it's one that I'm going to be extra patient with before I look for an entry on that. The next one I'll be looking at is New Zealand yen. New Zealand yen as well, very much like Aussie US dollar. We're seeing this expanding, and then now we're seeing aggressive push up. If we go to the 15, it's a little bit clearer there in terms of structure. We can see that, we essentially kind of just corrected this expanding, didn't quite make it to the low, and then we pushed up, and perhaps you wouldn't have taken this one, but it looks like, there's a squeeze in here now, and this could just run its course and keep going higher. So I would stay sharp with this for sure, because this may develop into something. Who knows? I mean, at this point in time, it's not really a trade that I want to jump into immediately. It doesn't look like something that's, jumps out to me and says, hey, you need to be, putting all your focus and time and energy into this one, because this could just run its course and go longer. So I think there's much better yen pairs on board. More than happy to actually just remove that completely and not worry about it. Euro Japanese yen. I think Euro Japanese yen as well. In terms of this forecasted play, it's looking pretty good. It's actually shaping up to be quite nice. We could potentially still get that run to the high and then get the sell-off. And I think that's more so what I would wait for on this pair. I wouldn't wait for the larger flag to the short. I think I'll just wait for that and see if that can develop. If that develops, that'll be more than enough for me, and I'll be very happy with that. I think given the time of day it is now, it's unlikely we're going to get to these areas, and if we do, it's going to be very impulsive, so I'll still be having to wait for the push down on the flag, and that could take some time to form. So maybe considered for a trade for next week. But I think if you are going to be doing your SMB looking at pairs you want to be putting on watch, I think EJ is definitely one you should really consider. CJ, so CJ is a position that I have taken. I've taken it just on the context of this sort of M-star corrective squeeze up, and how we've actually got there. I personally really do like this. We had an inflection point here, we filled it, we came back, we correctively squeezed back up, and then on the hourly we actually created a nice pin bar. I allowed price to basically look for a push down on the flag. Then when I saw price kind of just hovering and sitting over here, more so on the 5 minute, there was the entry kind of just sitting over here, but I didn't want to take that. I wanted to see if price can come back down. And as soon as it came back down, basically just got tagged into the trade. So that's basically the trade. So it's not really a bad trade, to be honest. I think in the grand scheme of things, this is quite a nice quality trade. We just have to see if it plays through. It does also hold the risk of price still doing something like this to make it to these areas before we sell off. However, given the context of the whole entire system of what's actually happened is we filled this ray line, we tapped in it twice, then for the third time we actually came in for it. We actually filled in here. There's more than enough for me to just say I'm happy to open an entry on this, especially being up on your account. Understanding that being up is completely different to being negative 5%. Because if you're negative 5%, perhaps I would wait for more confirmation, push down on a flag. But considering if you're up by a few percentage, or whatever it might be, then you could take this risky trade, and just understand the risk that comes with it. So that's basically it for CJ. We also have AJ here as well. I think AJ is quite nice. Structurally, we can see that we're aggressively moving up, very much like we saw with a few of the other pairs. These tight little flags, pretty good. I think we always knew that there was a possibility for this to evolve and make its way up. This was looking so much like a middle section as well. When we did have this sort of push up, I think yesterday we were talking about this one as well. There was the trade in here as well, where we had this sort of expanding, not the cleanest, and then there was probably this sort of vibe of a trade here as well, but not the cleanest as well once again. So it's not really presenting us with the best entries, even on the hourly, not so clean. Perhaps that expanding was the one, but then because of where it was, it's not the best of quality trades in my opinion. But looking at where it is now, perhaps there was definitely a lesson in there. So I think going back and actually just reviewing this particular area and seeing how I could have taken advantage of that might be something of interest. So I think in here, when we had this sort of push up, perhaps maybe there was a 30 odd pip stop loss, and I could be running around about 3%. So we'll have to wait and see. But AJ is looking very nice for the long to fill this in. I think let's just wait and see. Obviously, with the yen pairs all gearing up like this, and looking at how the Japanese 225 is, we could see some very, very nice momentum in the market. New Zealand CAD. So New Zealand CAD is it's one of them ones. We had a really nice retrace, and then we kind of just sat here for too long, and now it's just kind of like, am I either stuck in the market or the retrace was nice. We had this sort of continuation pattern below this, really nice. This little structure was nice too. We had that, and now it's just kind of, are we going to drop off, or are we sitting in this area? I think it's a very, very nice trade given the context of things, but because of all of this, I don't want to be pricing myself in there for the short, and that's basically it really. I think USD Swiss played out phenomenally. I think yesterday we saw this potential trade. Didn't want to take it, but I know that if I did take it, and I evaluated this earlier, essentially I would have taken a break even. I would have taken the trade on this as soon as I left it here. As soon as we ran roughly around about a percentage, I would have moved to break even, and then at that point there, price would have just come up and tapped me up for break even. So for that, I would have just been out of the market. But in the whole scheme of things, it played out really well. So I'll give it to you, USD Swiss. Played out really nice. Could be a pattern over here forming on the 15, which I was also looking at. But to be honest, it's not my typical trade. And yeah, I mean, Yeah, I mean, not really for me at this point. Would have to wait and see, wait for some more development over that. But yeah, it could be a trade in there. And EA is a very nice trade. So I did come out with 2% on this one. The question might be, why were you so aggressive with this trade? Well, to be honest, because I'll show you something on the higher time frame. If we look at the weekly, we have the obvious near miss over here, which obviously is not so clear because I have some drawings on the chart, but there we go. So we have this inflection point and then we have the near miss. We kind of impulse correction and then impulse and then correctively squeeze towards this high. We filled this high, broke back in and fully retraced, engulfed that. We didn't quite tap into it, but we got very, very close. Going on to the daily, we can see that it's maybe it's clear to some of you, maybe it's not, but we can see that there was a head and shoulders here. Left shoulder, head, right shoulder. Then if I drill into the 4 hour, we can actually now see that, right shoulder broke above the left shoulder and pushed down with aggression, which is exactly what I'm looking for. We had this sort of push down, but in terms of an hourly flag, it definitely was premature. But in terms of a 15-minute, there was more than enough there. So it's not my typical area where I would look for a 15-minute flag. I was waiting a little bit more. So the entry was left in here at a pending order. And I was waiting for one to come down here, to come back up to this area. So it came back down, taps into this area. It did tap into the third touch here, but I was looking for it to ideally come back in here and come back up here before it sells. So we had the push down, push back up, push down, push back up, and then push back down. And then I knew that there was a strong possibility, given the nature of Aussie related pairs and looking at how Aussie US dollar was at the time, that it could just go. And that was one of the reasons why I just left the pending order. And if I was tagged in, I took a break even, then I could opt in for a potential risk entry if available. If not, didn't want to leave too much percentage on the table. I know that this definitely has a lot more room to run. However, I'm more than happy to wait for the next entry on this one, just given that, there's going to be an abundance of movement in this. And I think taking something out is much more valuable than leaving something on the table as well. Whereas this can just retrace and pull up against me, and then I'm sitting there, twiddling my fingers. At least I made something out of the hard work and efforts, which I think is always a way to look at it as well. Like, are you getting paid for what you're doing? And yes, on the hourly, we can see that we did have that aggressive move. Originally, I was managing around about 50%. And then as price kind of just retraced here and closed, I was thinking, well, this definitely probably has strong possibilities to just aggressively move back up before it comes back down, just take people out of the market. Do I want to be sitting in that? Not so much. And then I thought, okay, you know what? I'm going to wait for something a lot more cleaner, where if we do get something, we get something more so like that. And if we do get something like that, I can position myself there and then go in for the short or the insurance entry. So that was basically it, to be honest. There's definitely very nice room. Understanding that where we closed as well, we had this sort of low here that I was looking at, and we kind of tapped into it and then kind of retraced on the 15, just a little bit more clear. At that point there, I was kind of like, well, even though this isn't majorly significant, this could just be enough room for this to, pull back, do whatever it has to do, and then we get a larger flag here, and then we sell off. And I think that larger flag territory is definitely now. So it's possible that we do get this larger flag before we sell off, and I think for that reason, that's why I'm happy to be out of that trade. So that's the context of exiting the position. And then Euro USD. Now, Euro USD is a tricky one. It is looking like it is going long. Looking at DXY, we do have this corrective squeeze here. And we can see that, if this does sell off aggressively, Euro USD is for sure going to be going off aggressively. Looking at it on the daily, we can see that this would be a very, very nice structure leading into this hook point. We have a 1, 2, 3 into this with a middle section, which isn't the most cleanest, but it's definitely still a middle section. And I think for that reason, I was really interested to see how this develops, but I want to wait for more commitment. If we do get a strong push up, continuation, and we're up to the upside, for sure, that is a great place to place myself. It's looking more like a running channel in my opinion though. It looks like this can actually just aggressively start moving up and then really start getting aggressive, which works in line with the DXY. If we look at the DXY, we are looking for that strong sell-off. So the real question now is, are we ready to sell and are we ready to buy? I don't want to be jumping into the market unnecessarily just because I can. I want to be waiting for something a little bit more clear. Obviously, we can see here there's more than enough candles now to look for an entry. In terms of an entry, it's not the cleanest, it's not the easiest to actually just take this and just be like, well, entry placed, done. If I was to take a reduced risk, I would probably already be in the market, I'll be honest with you, and I would have already been placed somewhere down about here. So all in all, question is, do you want to be placing yourself over here or over here? Most likely over here is the best place, but more than likely a lot of people could be positioning themselves above. I think there's, it's a monster trade anyway. This is going to develop into something absolutely stunning. Positioning yourself correctly here is going to be so strategic. We fully engulfed all this price as well with that bullish candle. Yeah, we'll just have to wait and see how that develops. I mean, I think Euro USD is definitely the gem of all the trades at the moment. I really like Euro Aussie and USD Yen. USD Yen for the short right there. Obviously, CAD Yen, it is what it is. We've just got to wait and see now. So there's a few trades on the table, a few different plays we can look at. I think structurally we're looking at some really nice movement across the board on a lot of these pairs, a lot of volatility to come into the market. So I would stay very sharp, stay very focused on what you're looking at. And definitely keep your eye on JP225 and the DXY. I think looking at the weekly closes as well is definitely now in order because we are literally at the end of the week, and also we have NFP just around the corner. So price that in when you are looking at these weekly closes. I think they're very important. I think looking at, for example, USD Yen, if we close weekly down here, what does that mean? What does that mean for this? DXY, if we start closing down here, can we just sell off? Yeah, absolutely. Euro USD, if we start closing up here, this paints the picture. So it's going to really set a good week for next. And I think the following weeks are going to be very, very nice. So thanks for watching, guys, and I'll catch you guys in the next video.